Good morning. Today is Tuesday. We are August 22nd. The time right now in Singapore is 11:13 in the morning, and overnight markets has been pretty quiet on a relative basis. Rising yield, which is currently the 10 years Treasury, is at a 15 years high, and that is putting a cap on risky assets, including equity markets. Now, what you can see in front of you is the 4 hours micro E-mini futures, on the Dow. We can say the Dow actually registered a marginal low overnight at 34,308, and this is about the only equity index that actually registered a marginal low. We don't have the same thing in the Nasdaq or even the S&P 500. So we can see that on a relative basis, the market is still waiting for something to happen, and that something is probably going to be what happens at the Jackson Hole symposium, which is an annual gathering of central bankers, economists, and analysts, after which the Fed chairman is going to release a statement. And of course, the market will be looking forward to what the Fed chairman is going to say about interest rates, about the economy. Basically, what the market will be expecting is what the Fed is going to do as far as interest rate is concerned. So ahead of that, the market is pretty quiet. We do not have any major statistics that can be released today, and the only one that we can look forward to tomorrow, we're going to have a bunch of purchasing managers index going to be released from Germany, from Eurozone, for the US as well. Now, that will be, of course, the highlight for tomorrow. But in the meantime, the equity market looks a little bit quiet right now. There is the prospect of a bounce, but right now we are seeing the even if we do get a bounce, it's going to be a technical rebound. And in the Dow Jones, the most I can expect is probably a challenge of the 35,000 levels, but I don't expect it to sustain for much longer before the market hits downwards again in an extended decline from the high of 35,844 that we see in late July. So the target right now is about 33,850 in the futures contract. We have already hit this immediate target, which is 34,500, and the market has a low of 34,308, and I do expect it to bounce a little bit before it come back down to complete a 5-wave decline targeting 33,856. And in the S&P 500, similarly, I'm using the micro E-mini as S&P 500 futures as a reference. We can see that the price has actually bounced, and we do not have that marginal low that we saw in the Dow. The low remains at 4,350 in the futures contract. In the S&P 500 overnight, we have a bounce into a primary resistance area, which is 4,420 overnight. You can see that this is the price range in which I expect the price to hold. There is a possibility the market may ease off a little bit before it attempt one more round. The key area to watch will be somewhere between this bracket of prices between 4,414 to 4,434, and all the way to perhaps to challenge this the underlying of this blue color line, which is previously a support line, now is turned resistant. So I do expect prices to actually bounce a little bit higher before it continue to drop. My target for this round is somewhere between 4,262 to 4,305. So we do see a little bit more to the downside as far as equity index is concerned. Now, in the micro E-mini Nasdaq 100, we do get a bounce, but the bounce has yet to hit my target level. I do expect a little bit of pullback before the market goes back up again to test the 15,100, the 15,300 range, but I do not expect the market to trade much higher beyond that. I do expect the market to come back down again to test the 14,000 to 14,400 levels. So do watch out for a bounce followed by another dip. And over in Asia, we can see that the Hang Seng is actually struggling. It has already hit my target, which is at 17,707, and the market right now is already a little bit stable, but right now it is a little bit premature to say that this is the bottom, because it does looks bad going forward, because the overall trend for the Hang Seng is looking to be very bearish. Even if we do get a bounce, I do expect the bounce to be contained between 18,500 to 18,800 range before the market comes back down again. And in the Nikkei 225, you can see the Nikkei actually rebounded, but I think the rebound is stalling a little bit, although it does have a little bit more room to the upside. I do expect a challenge of 32,000 to 32,200 range before the market comes back down into this bracket of prices about 30,700 to 31,240. So again, overall, I do have a slightly bearish outlook in equity markets. Now let's take a look at the dollar itself. Now the dollar remains very, very firm overnight. We have a high of 103.57 This was traded last Friday, and the market has not budged very much from this price, and there's a very likelihood it will dip a little bit. I think because over the last 48 hours we can see that the price has been very very stable, so I do not expect a major dip here, but I do expect a minor dip, perhaps into the 102.33 to 102.80 levels before the market goes up to challenge my target at 103.84. So this should complete a 5-wave rally, and after which the market will probably come back to test this area one more time. And of course, this is where we are right now in the euro versus the dollar. The euro has actually hit a bottom of 108.45, and now it's rebounding. But again, this rebound is going to be a technical rebound, and I do expect some kind of resistance emerging from 109.55 to 109.80 levels before the market comes back down again. I have a medium-term target at 106.16 to 107 even. So do watch out for further losses in the principal currency, and that also include the sterling pound. Although the sterling has been relatively firmer compared to the euro dollar, but this is likely to be a 3-wave rally, possibly to challenge the 128, perhaps even surpass it marginally to as high as 128.60 to even 129 even before the market unravels to the downside. I have a target somewhere at about 121.70 to 133 level. So this is a wide range of prices. No, sorry, this is 132. My pardon here, this is not 132, it's 122. So if we round the number, it should be anywhere between 120, 170 to 123 even. Okay, and over in the Aussie, we probably have seen a bottom for now in the Aussie. The low traded is 0.6364, and this was traded last Thursday. Market has been doing practically nothing. It has been moving sideways with the potential to rebound, but I expect the rebound to be kept below the 0.66 levels before the market comes back down again. I do have a target. This is the October low at 0.6170. So this entire range, about 60 cents to 62 cents, is going to be my medium-term target for the Aussie markets. And the one that is really causing a little bit of a discussion is going to be the dollar versus the yen. Now, we all know the dollar yen is in a intervention watch right now. So-called intervention watch is to watch out for signs of Bank of Japan coming into the market to intervene in the foreign exchange market by selling the dollar and buying the yen. Now, the 146 is particularly crucial because the last time this price actually was traded was in September last year, in which the Bank of Japan came in to intervene very aggressively, which took the dollar yen from 146 to 140 all within 24 hours. So that was a 600 pips drop, and obviously now the market is also very cautious, but it does seem that the market participant wants to take the market higher. There are talks that maybe the intervention level is at 150, so we do not know for sure. But anyway, anything above 146 is going to be very, very heavy to be holding a long position, and there is no basis to go short the dollar yen as yet because the fundamentals still support a strong dollar scenario. So at the most we can see is a 3-way pullback, technical pullback, maybe to about 144.40 to 144.80 levels. We expect, I expect prices to hold a little bit before the market attempt higher to tease the Bank of Japan to come in to intervene. Okay. Now, in dollar Canadian, we can see that the dollar has been firm, and we can see that in the dollar index, and we definitely can see that in the dollar versus the Canadian dollars. We can see that the market high is 135.75, and there is the possibility after a minor pullback, the market may actually challenge the 136.70 level, which was the April high of this year. And over in crude oil prices are a little bit soft this morning. We can see that the price came down from $84.89 all the way to $78.95 before we see a bump up. And this price only managed as high as $81.75, just a little bit short of my ideal sell zone here. So obviously I was hoping the market can bounce into this level to complete a 3-wave rally before it comes back down again below the $78.95 level, ideally to test the $76 to as low as $74.40. So this will be my ideal buying price. Okay, let's see what happens. And in the precious metals, we can see that because the dollar is so firm and because the treasury yields are at a 15 years high, now they take away the incentive of buying gold because gold practically has no yield, whereas the US Treasuries fetch a yield of above 5%. Okay, for the 10 years is already above 4%, is at a 15 years high. So we can see that speculators have shifted their money to be holding US Treasuries rather than holding on to gold. So unless dollar start to come back down, it's very difficult for precious metal to rally. So in that case, if we do get any kind of rally, it's probably going to be contained. I suspect if we're going to get a more robust rally, 1,918 to 1,928 is probably going to be the maximum we can go, although we do see there's a likelihood of another decline in the precious metal market, and let's see what happens going forward. But I do expect unless the dollar come off, the precious metal complex is highly unlikely to rally. Now, there is a slight difference in the silver market. You can see silver actually rally overnight, and this does looks a little bit strong. But again, I do classify this as a technical rally, and the low so far is $22.22. And this rally here we see is likely to be kept around $23.53 to $23.84 before the market unravels to test the June low at $22.11. Do watch out for this move here. And over in Bitcoin, after the sell-off that we saw on Friday last week, we can see that prices are remaining still on the rope. Prices marginally dipped below the 26,000 levels for the first time since we saw the rally this year. And we can see that the prices are probably gunning for the near-term target of $25,630 or the June low at $24,840. So between these two levels, I think the market should be able to find a temporary bottom forward. Now, this is all I have for you for today. In the meantime, you take care. I'll come back to you tomorrow with another update. Bye-bye.